It's official. PayPal is now a value trap. I mean, Kramer said it, so it must be true, right? Well, guys, to be honest, unfortunately, there is a case for PayPal being a value trap. So let's talk about that today. Let's get into all the specifics and figure out what's right, what's wrong, and basically kind of separate fact from fiction with all this. So let's look at the facts and see if this is indeed a value trap, or did Kramer basically just set the bottom for PayPal stock and it's on its way back up? And thank you to everybody out there that supports the channel, likes the videos and comments and all that good stuff. I try to get back to all you guys. But I wanted you guys to know I have a new channel that'll be linked. It'll be the first comment down there, pin it right down there. And it's going to be about finance, retirement, and entrepreneurship. So, definitely here for the stock investing. But over there's where you'll get content on that. So go ahead and check out the pinned comment down there and subscribe over there if you want to see that type of content. So let's start off with defining a value trap first, and we'll basically take this straight off on Investopedia's website there, and we'll put it right up here on the screen for you guys. Value traps are investments that are trading at such low levels and present as a buying opportunity for investors, but are actually misleading. For a value trap, the low price is often accompanied by extended periods of low multiples as well. A value trap is often a poor investment. The low price and low multiples mean the company is experiencing financial instability and has little growth potential. All right, so let's break it down piece by piece here. Value traps are investments that are trading at such low levels and present as buying opportunities for investors, but are actually misleading. All right, I don't think there's any doubt that PayPal is absolutely presenting itself as a massive buying opportunity. And when I look at it from a valuation perspective, there isn't many stocks in the stock market that are presenting a better deal in regards to valuation than PayPal is. This is basically the cheapest the company has ever traded, but we got to answer the question, is this misleading or not? And we unfortunately don't have enough information for that yet. So let's jump on to the next piece here so we can kind of get to the bottom of that. Next up, for a value trap, the low price is often accompanied by extended periods of low multiples as well. Yep, I got to be honest here. We got to check that one right there. PayPal's basically been in the gutter for over a year now. So basically, I mean, that multiple has been down for an extended period of time. And remember, Meta's multiple actually got lower than what PayPal's is. That's how beaten down it got. But it didn't stay in the gutter very long. It was not down for hardly any month. I mean, we just had, a few months where it was extremely undervalued like this before it took off back up again, getting back to a much more normal valuation for Meta. So unfortunately, I got to say PayPal absolutely, when in regards to this part of is it a value trap or not, absolutely meets that definition. But we still need this last part to come in true as well in order to kind of complete the value trap definition. A value trap is often a poor investment. The low price and low multiples mean the company is experiencing financial instability and has little growth potential. So has PayPal been experiencing financial instability, and does it actually have little growth potential in the future? So let's basically just go straight to the earnings there, and we'll look directly at that to kind of give us the answers, at least to the first piece in regards to financial instability. And let's start with revenue growth, which, given all the turmoil with the price, you figure you would have declining revenue, but that's not the case. They are still pushing up revenue quarter after quarter, although the growth rate has slowed. I agree there completely. But that happens as your company gets larger and larger. I mean, basically, you can't maintain a 50% growth rate forever. It's just not going to happen. You're eventually going to, tick down into those single-digit growth rates per year. Now, taking a look at EPS, you see that it's a bit unstable. I agree completely there, but it's finally back on the uptrend again. And when you look back just a few years ago, they are still producing far more profits than before, despite EPS kind of being all over the place there for a little bit. So basically, revenue looks fine. We have EPS basically starting to stabilize and starting to trend up. So that essentially means I don't think it meets that first part of that definition, but we have to look at growth and basically see, are there very little growth prospects for PayPal in the future to kind of wrap up this definition here to be able to place PayPal in the correct category of a value trap or not. Well, I actually broke down PayPal's growth prospects in the future in the video right up here. I just posted it this last weekend or so. So make sure you check that out if you want all the details and kind of, each process of it step by step. But essentially, Braintree is growing like just a breakneck pace here. It's almost a triple-digit growth. And that right there is where the growth engine's going to be in the future. And remember, when we're talking about that particular product, it has much higher margins than PayPal's normal, business line out there that drives the vast majority of the revenue. So as that continues to grow, you're going to see more and more profits go down to that bottom line. And remember, they're kind of at the beginning of the growth curve in regards to that product versus, obviously, PayPal's main business is very much a, I won't call it legacy business, but it's very much a mature business, and there's growth there. There's just not massive growth there. You've got to have something else coming in to create that massive growth wave to continue the growth moving forward. So to me, that's not what a dying company looks like at all. If anything, it kind of reminds me of Amazon, a great company that was growing steadily, but it definitely had, the growth rate slow. A lot of things were, they're just too big. They're too large. They do too much in a very maturing market. And then all of a sudden, Amazon started doing AWS. And I remember it was a joke. Everybody's like, what are you doing, Amazon? That's stupid. You're just wasting money. Oh, this is another one of their side projects. Whatever the case was, the point being, it started off as a joke. And now it is a massive revenue driver. And more importantly, one of the biggest profit centers that it has. And it's growing at a breakneck pace. So something else that started off very, very small, kind of like Braintree is kind of what it reminds me of. And, it's not really making a huge impact on the bottom line yet, but there's definitely the growth rate there. And it's definitely kind of the next phase and what Amazon can do. And now all of a sudden it's a huge contributor to the bottom line. I think Braintree is kind of following that same exact path. So this is I'm not saying it's going to be the same. I'm not saying it's going to be as big as AWS or anything else like that. But in regards to something that kind of looks similar that I can kind of look back on, it's kind of started off small and has grown up exponentially and kind of took them into the next, took Amazon kind of into the next sphere. This is something I could see absolutely doing that. But even if you don't believe that at all and you don't want to buy into that narrative and say, no, I don't think they're growing anywhere or going anywhere or anything like that, let's take a look at the actual, that's fine if you actually want to think that. So let's look at the actual industry that PayPal is in. And you tell me, is it a dying industry or is it a growing industry with a growing TAM and a growing market share that PayPal could potentially tap into the future? So do you believe fintech as a whole is growing? Or is it dying and it's basically going nowhere? That to me is the question you've got to answer in regards to PayPal. For me, it's absolutely a growing industry. Fintech is part of the future, not part of the past. When I think of dying industries, I think of something like cable, for example. That right there is a dying industry. Sure, there are some great stocks out there, and I mean great like in terms of past stocks that could very well be value traps because they're trading cheaply because, hey, guess what? I don't think cable's going to make a comeback. I don't think the cable companies, with all the debt and the way their balance sheet look and everything else that's going on with them, I don't think they're making a comeback anytime soon. Now, that doesn't mean the business can't continue to move forward. It doesn't mean there's not a market for it, but that is absolutely a dying market. Now, it doesn't mean it's going to die tomorrow. It's I got a 20, 30-year runway in terms of dying, but that right there to me, what I would call a dying market, I don't put fintech anywhere near that category. Matter of fact, I'd put it the exact opposite in terms of it's going to be high growth into the future as more and more things move online, as the population that, prefers legacy style businesses like cable start to age out, and as younger folks start hitting their financial prime. That to me right there is the avenue and where I think fintech is going and where the opportunity is. So bottom line here with all this is, for me, although I cannot disagree that PayPal absolutely exhibits some, basically value trap traits. Absolutely it does. But it does not check all the boxes all the way across the board in order for it to be an actual value trap, in my opinion. So for me, this is an opportunity right here. The growth rates are just too great. They have too many good things coming in. More importantly, they're in a growing industry, not in a dying industry. So I'm not quite sure PayPal is in that value trap type category yet. I still think there's a lot of growth to go. Now, is it Meta type growth? I don't think so. It didn't get beaten down that low and they don't have the same margins and a lot of the same things that Meta has moving forward. But is there an opportunity there to make very, very good money on this stock long term? In my opinion, there is, and you guys know I own the stock. I've been buying it for a while now, and I'm going to continue to add as long as Wall Street continues to be silly with this stock. And if you want to see all those buys in real time, you want to see my watch list complete with price targets, you want to take 5 courses for free, use the stock analyzer tool for free, and a ton more, make sure you check out the link in the description for my group and see if the membership's right for you. Again, there's so much in there, guys. Just check it out. There's a free gift for you guys there too. So check it out and see if it's right for you. And click this video here if you want to see exactly what I'm buying in this market. And click here to see my exact plan for this market. So thanks for watching, and we'll see you in the next one.